What is going on, everyone, and welcome back to Explain the Charts. Today is November 14th, 2025, and we are looking at Apple, symbol Apple, which is currently trading just below its all-time highs. There is a ton of news circulating, from blockbuster earnings to a fascinating story developing around its AI strategy. In this video, we're going to unpack all that news and then dive deep into the charts to see what the price action is telling us. First, let's talk about the news, because the fundamental picture for Apple looks very strong right now. The company recently reported a massive earnings beat for Q4, with total revenue hitting over $102 billion, an 8% year-over-year increase. Their services division also brought in a record-breaking $28.7 billion. This was largely fueled by what appears to be very strong demand for the new iPhone 17 lineup, particularly in the US and China. Despite a slight dip in China's sales last quarter, CEO Tim Cook expressed confidence that sales would return to growth in the holiday quarter. Perhaps the most interesting narrative is around Apple's AI strategy. For months, Wall Street criticized Apple for lagging its big tech rivals, but that sentiment has completely flipped. Now, with competitors' massive AI spending coming under scrutiny, Apple's more measured approach is being hailed as restraint and viewed as a blessing. Furthermore, the anticipated integration of Google's Gemini into Siri is being seen as a future bull point that could trigger a massive device upgrade cycle in 2026. However, it's not all clear skies. There are still lingering concerns about regulatory risks and the ever-present threat of tariffs. Most analysts remain bullish, with firms like Bank of America raising their price target to as high as $320. Now, let's look at how this news translates to the daily chart. We can see a powerful uptrend for most of the year, with one very notable exception. Back in early April, we saw a dramatic sell-off where the price bottomed out around $169, which now stands as the 52-week low and a critical long-term support level. The massive volume during that period signaled a major capitulation event, which was followed by a sharp and sustained recovery. The price then rallied to a summer high around $237 in July before another significant drop in early August, which shook out weak hands before the next major leg up. From September through late October, the price built a strong base of consolidation, mostly trading between $225 and $240. This consolidation period was the launchpad for the most recent explosive move. The catalyst was the earnings report at the end of October, which caused the stock to gap up significantly, breaking out of that range. This rally culminated in a new all-time high of $277.32 on October 31st. That all-time high is now the most critical resistance level we need to watch. Below the current price, we have a minor support zone around the $267 to $270 area, which marks the bottom of the recent consolidation. A more significant support level sits at the breakout point, around $255 to $260. Any serious correction would likely find strong buying interest there. Let's switch to the 1-hour chart and zoom in on the action since that late October earnings report. Here you can clearly see the massive gap up on October 30th and the powerful rally that followed. After hitting the all-time high, the price has entered a period of healthy consolidation. For the last couple of weeks, Apple has been trading within a well-defined range, roughly between $267 on the low end and the $276 to $277 area on the high end. This type of sideways movement after a strong uptrend is often a bullish continuation pattern, like a bull flag. It suggests the market is simply pausing and absorbing the recent gains before making its next move. Volume has tapered off during this consolidation, which is also characteristic of a healthy pause. A high-volume breakout above the $277 resistance would be a strong confirmation that the uptrend is resuming. Conversely, a break below the range support at $267 could signal a deeper pullback, with the next logical target being that $260 support zone we identified on the daily chart. Now for the shortest time frame, let's look at the 15-minute chart for the last 3 days. On November 11th, we saw a strong push from $270 to over $275, testing the upper part of the recent range. However, it failed to break through and has since pulled back over the last two sessions. Currently, the price is finding some stability around the $272 to $273 level. This tight, choppy action shows indecision in the immediate short term. Intraday traders are likely waiting for a clear signal, either a pushback towards the highs or a breakdown below this immediate support. Without a significant catalyst, we may continue to see this range-bound action as the market digests the recent news and rally. Alright, let's go back to the daily chart to recap and synthesize everything we've discussed. The long-term trend is undeniably bullish, supported by strong fundamentals and a positive shift in the AI narrative. Let's outline the key price levels one more time. Immediate and critical resistance is the all-time high at $277.32. If we break above that, we are in blue sky territory, with psychological levels like $280 and analyst targets around $300 to $320 coming into play. On the downside, we have immediate support around $272. Below that, the key range support is at $267. If that level fails, look for a potential retest of the breakout zone between $255 and $260. So, what are the likely scenarios? The bullish case, which I believe has about a 70% probability, is that this consolidation resolves to the upside. The fundamental tailwinds are strong, and the chart pattern is constructive. Look for a high-volume break above $277 to confirm this scenario. The bearish case, with a 30% probability, would involve a failure at the all-time high, creating a potential double top. A break below $267 would be the first major warning sign, and a move below $260 would indicate a more significant trend reversal is underway. This could be triggered by negative macroeconomic data or unforeseen geopolitical events. Going forward, keep a close eye on holiday sales figures and any further news on Apple's AI developments, as these will be major catalysts. And that wraps up our analysis of Apple. Thank you for watching Explain the Charts. Please remember, this content is for informational and educational purposes only and should not be considered financial advice. You should always conduct your own research and consult with a professional before making any investment decisions. Don't forget to hit the like button and subscribe for more content.